The UK's first half results season is all but done, and the same can be said for the USA. But a few companies have slightly different year ends, and one company that reports off quarter, as it were, is currently one of the most important in the world, NVIDIA. The silicon chip giant designs its graphics and AI enablers, but then outsources their manufacture primarily to Taiwan Semiconductor Manufacturing Company, or TSMC, and it does so in a fabulous business model. Not only that, NVIDIA has a January year end. Its second quarter therefore runs to the end of July, and the numbers for that 3-month period are due for publication on Wednesday the 28th of August. Now, you could probably already guess by now that NVIDIA is important and it matters for 3 reasons. The first is that it's seen as a key enabler of artificial intelligence, or AI, and the associated large language models that can help facilitate a potential technological revolution. Second, it's the world's 3rd largest company by market capitalization and the best single performer in America's S&P 500 index at the time of recording. It's also a leading member of the Philadelphia Semiconductor Index, or the SOX. And finally, it's one of the so-called Magnificent Seven, along with Alphabet, Amazon, Apple, Meta, Microsoft, and Tesla. This septet between them represent more than a third of the S&P 500 stock market value and a fifth of the FTSE All-World Equity Index's market capitalization. These 7 names have gone a long way to helping equity markets go higher, and if they stumble, the effects could be felt widely. And students of stock market history will remember that similarly lopsided markets in the late 1960s, American tech stocks, early 1970s, the Nifty 50, and late 1990s, tech stocks again, well, they all eventually tipped over, but the word is eventually because it took a long time for them to do so. And the past is no guarantee for the future by any means either, but the summer's stock market stumble has coincided with a sharp retreat in NVIDIA's share price, and indeed the SOX for that matter. But as I record this, NVIDIA is still remarkably just on the verge of bear market territory after 20% plus pullback from July's all-time peak. And don't forget, there was a 10-for-1 stock split back in June. From a more fundamental earnings point of view, NVIDIA has, in fairness, absolutely demolished consensus earnings estimates and raised guidance for each of the past 5 quarters, and that does help to explain the stellar share price performance. Chief Executive Jensen Huang set a higher bar still for the second quarter of the fiscal year when he guided towards further sequential improvement in the top line alongside the first quarter results, although this time he was a little bit more guarded on near-term costs and profits. Whether Mr. Huang was just sandbagging the numbers or not, we're about to find out, and it's against that guidance that these second quarter figures will be benchmarked. Analysts will also look for any steering what the third quarter and remainder of the year to the end of January 2025 may look like. Thanks to the shift towards generative AI and accelerated computing, whereby core control remains in the central processing unit and data-intensive tasks are managed by a separate acceleration device, NVIDIA has guided second quarter sales to a mere $28 billion, more than double the $13.5 billion achieved in the same period a year ago. Should Mr. Huang give a steer for the third quarter, the current consensus is $30.7 billion of sales compared to $18.1 billion in the third quarter last year. Mr. Huang's guidance for gross margin of 75%, $4 billion in operating expenses, and a 17% tax charge imply a net profit of around $15 billion, more than double the figure of a year ago, but broadly flat quarter on quarter. It also implies a headline earnings per share, or EPS, figure of around 63 cents compared to 61 in the first quarter. For the third quarter of the year, analysts are forecasting net income of $16 billion and EPS of 68 cents, and in this context, they may look out for any comments from Mr. Huang on reported delays in the launch of the new Blackwell data center chipset, owing to some alleged teething technical troubles. Production of Blackwell was due to ramp up in the second half of this year, as NVIDIA looks to maintain its technological edge by quickly improving upon the Hopper chipset. This possible Blackwell glitch raises one small question, and analysts will also keep an eye on the balance sheet. The company did have to work through an inventory bulge in 2022, and it has actually done a good job with that subsequently. Inventory may be rising in dollar terms, but given the strong sales growth, that's hardly a surprise, and the inventory days are back to pretty normal levels by historic standards at around 95 days. Also, however, accounting wonks will be looking at trade receivables, which are rising. This is related to revenues possibly booked by NVIDIA, but where payment has not yet been received. NVIDIA's own website offers detail on customer funding it provides, given the expensive nature of the chipsets. Investors with long memories will remember how Cisco and some internet equipment giants provided so-called vendor financing in the late 1990s, and how that helped to boost demand in the near term, but exacerbate the slowdown that followed as an investment boom turns to bust. That said, NVIDIA sales growth again is currently so rapid that days receivable are not above historic norms, so there may only be trouble ahead if customers start to slow their purchases for any unexpected reason. Thank you for watching. Hope that you and your families are all well and in good spirits, and I look forward to seeing you again next time.